This video is for you if you want to understand exactly what the highest performing short-term rentals look like. And I'm pretty sure it's not going to be what you think. Today is a tale of two deals, both of which someone I work with recently had under contract. And one of them was kind of an okay deal, wasn't too bad, but the other one is just an absolute slam dunk fantastic deal. And on the surface, they both look pretty similar. And so I'm going to share with you the details around both of them and what separates them so much and why sometimes the best deal that you do is the one that you don't do. So just to share a little bit of background, Robin and Brett are an awesome couple that I work with. They're members of my Blueprint program, and they recently got a property under contract. It's actually this property here in Ottawa, Illinois. So you can see it was listed for $320,000, which is what they got it under contract for. And it's got a lot of features of the type of property that I recommend, that typically can lead to high performance, but it's missing a few others. So Ottawa, Illinois is about an hour and 45 minutes outside of Chicago. It's not a suburb of Chicago, but it's also within driving distance. It's near Starved Rock State Park. It's right along the river, kind of has a cool downtown area, but it's kind of removed from population. And so it has some features like close to some local draws, but I tend to like to be a little bit closer to population because then you get bookings for leisure travel because you're close to some attractions, but then also non-leisure travel. Anywhere where there's population, there's people traveling for work, for funerals, for weddings, for visiting family, all these different reasons that are non-leisure travel reasons, and that helps you book up, especially in your off season. So you can see this property is a nice property. I mean, obviously just built 3 years ago, so very, very turnkey, listed for $320. And so we ran the numbers on it. They sent it over for our weekly review of deals, and we ran the numbers on it. And what we realized is it adjusted some of their numbers a little bit, but it was going to cash flow about $1,300 a month, and it was going to have a 14% cash on cash return. Now, if you're buying a long-term rental, those numbers might be really good. That's pretty good cash flow for a long-term 2-unit that's turnkey for $320,000. But what we know is that for short-term rentals, you can actually net much higher than that. And so it has some features that were pretty good, and it was kind of like, it would be an okay deal. I'm not mad about $1,300 a month, but at the same time, there's a huge opportunity cost of doing a marginal deal because you're investing those dollars into a marginal deal when you know that you could invest them in a much better deal. So I'm going to get back to how this all played out, but I want to pause for a second and I want to share with you the factors that lead to the absolute highest performing short-term rental. So these are not emotionally what feels like a good short-term rental or what seems like it would make sense as a short-term rental, but what are the actual metrics that are going to lead to the highest return on investment? So for every dollar that you invest in this deal, you're getting the absolute highest return, and this is a fantastic deal. And so I want to share with you my screen real quick, and I'll just walk you through this. So really there's 3 main factors that all work in tandem with each other. And number 1 is the rate. So that's the nightly rate or the daily rate or whatever you want to call it, but the average rate that what you're going to charge per night for that property. And number 2 is occupancy. And this is how often it books up, right? So these 2 factors are the first 2 factors, and these are what leads to the overall revenue on an annual basis. So if you multiply these by 365, it gives you your annual income. So it's real easy to figure out your annual income. So what we do is we look at the comparable short-term rentals in that area that are very similar to the property that you're considering buying. And you can figure out what the general, rate, you're always going to have a little bit of a range, but we always use the most conservative end of that range to figure out what your nightly rate, your average nightly rate, and your average occupancy is going to be, multiply it by 365. So let's just say that you have a property that's going to bring in $70,000 per year annually. Now, the question is then, is it a good short-term rental or is it a bad short-term rental if it brings in $70,000 a year? And I would say the answer to both those questions is yes. It is the absolute best short-term rental, and it also could be the absolute worst short-term rental because it all boils down to the third factor, which works in conjunction with these, and that is your price, right? So if you're paying for that to get that $70K, if you're paying, say, $100,000, and that leads to $70,000 per year, then that is a phenomenal deal. Once you subtract out your expenses out of this, you're going to be left with a very high net cash flow, because a $100,000 property is going to have a very low mortgage, very low taxes, very low insurance, all the expenses are going to be pretty affordable, and you're bringing in a relatively high amount compared to the purchase price. Now, if you're buying this property for $1 million, some people might say that that's a good short-term rental, and I see a lot of $1 million short-term rentals out there that bring in $70,000 a month, but when you start to look at all your expenses on $1 million property, the mortgage is much higher. Your taxes are definitely going to be much higher. Your insurance is definitely going to be much higher. You're probably going to have a lot more amenities on $1 million property. It's probably going to be more square footage, so the utilities are going to be higher. You're probably going to have a bigger yard to mow. Like, all these things start to add up when you start to look at the expense side of the equation, which no one likes to talk about. And so now you're left with a negative net cash flow. So Robin and Brett already had this property under contract when we went over it. And so it was kind of a difficult conversation. And they were kind of tempted to just move forward because they had already got it under contract. And in some ways, it just felt easier to just move forward, even though they knew it wasn't that great of a deal. And I see this happen all the time. People are like, well, it's my first deal, so I'll justify, I don't need it to be a home run. I just want to do a decent deal. And there's a huge opportunity cost to that because, like I said, that means you're not taking those dollars and that time that you're spending on this deal and putting it into a phenomenal deal. So eventually, after we talked it over, they decided to walk away from this deal because the numbers just weren't going to work for them. And so that freed them up to continue looking for other deals. And so just this past week, they came across a different deal. And this deal is one that, again, a lot of people wouldn't expect to be a killer short-term rental. You can see the purchase price is very similar. It's got a lot of similar attributes. It's actually a 2-unit property, but this one is in Milwaukee, and it's obviously very close to population because Milwaukee is a highly populated city, and it's a 2-unit property, but each unit is much bigger. And as we look at this property, you can see it's very turnkey. It's an older property. It wasn't just built, but it was just recently rehabbed. And so it's in really good shape. There's going to need to be some updates made to it, but overall, you can see fully remodeled bathroom, great hardwood floors, nice little backyard area between the house and the garage. And this property is located, like I said, in Milwaukee. So for those of you that aren't familiar with the Midwest, Milwaukee is just north of Chicago along Lake Michigan. And as we zoom in on what part of Milwaukee this is in, it's in kind of the downtown area or downtown submarket. It's in the River West neighborhood of Milwaukee. And so again, looking at the listing, it's listed for $300,000. The units on this one are much bigger. So one's a 4-bedroom, 1-bath, and one's a 3-bedroom, 1-bath. So 7 bedrooms total. So because you can sleep a lot more people in each side, the nightly rate is higher. And because it's in a much more populated area, it drives up that nightly rate as well. And so when we look at AirDNA, that's the first thing we typically do is just to see for this submarket, what are the averages for the area? So we can see that there's 721 active short-term rentals in this submarket. There's a 57% occupancy and 188 average daily rate. And then we can even look at the different types of listings, different size listings. You can see most of them are 1 and 2 bedrooms. I mean, that's 70% of the property. So what they have with this property is 3 and 4 bedrooms, which there's not nearly as many of. And they even have the super listing of listing all 7 bedrooms together, the whole building together, because you can have simultaneous listings at the same time. And so then we look at the occupancy curve to see over the last 3 years what the occupancy looks like. It obviously is a bit seasonal, but because it's close to a large population, it's not as seasonal as a lot of areas. So then from there, we go to the actual comps themselves. And so I always like to put the address into Airbnb and then see what properties pop up around it. And this is really interesting when we put this in here, because what we saw on this particular property is that it's sort of like on this borderline. You can see over on this side, on the right side, the east side, there's a lot of short-term rentals over here. But then on the west side of this property, there's not too many. It's kind of a short-term rental desert. As you zoom in, you're going to see more that pop up, so now some do pop up over here. So there are some that are over on this side of this North Holton Street, but not nearly as many. So that's an indicator that there's some issue. So sometimes it could be a regulation issue, but in a city like Milwaukee, it's probably not going to be this side of this street is regulated and this side isn't. So more than likely, it's just that one side lends itself better to short-term rentals. So, there can be block by block in cities, it can be kind of rough area. Certain areas could be kind of rough and be tough to make a short-term rental work in. And then other areas just a block or two away can be much better. And so this is kind of like borderline. And this can actually be a positive thing, because sometimes you can get a really great deal on a property and it's in the path of progress. So if things are kind of improving, they're building out, rehabbing properties, adding more amenities, things can be getting better. So what we did is we looked at all the comps around it and we pulled up these different properties like this one here, which is right down the street from it. It's a 3-bedroom, 2-bath property. It's got great reviews. And we just look at their calendar and we can see, okay, today is May 1st. And so we're looking over the next few weeks, are there bookings? Obviously their price point must make sense if there's bookings on the calendar. And so we can see different times, there's different bookings. Let me actually I'll pull up the last weekend in May. Here, they're at $479 per night. And this includes the cleaning fee. So you got to subtract that out. But we're assuming about, a $90, $100 cleaning fee. Here is in June, same price. So they kind of keep the same price. In June, you can see, and there's several bookings in June. Half of July is already booked up. We'll look at weekdays in July. So weekdays are $226, and then weekends are in the 400s is what we're seeing. $350 between Sunday and Tuesday here. So we're trying to get an idea of pricing in different seasons. You can see all of the weekends in August are already booked, and it's just May 1st. So there might be even room to increase pricing a little bit. So they're in the 200s on weekdays and 400s on weekends. I would recommend making a 3-day minimum on the weekends because they have a lot of one-night bookings, which is not the smartest pricing strategy, but that's what some people do. September, they already have bookings into September, and then you can look in the off season. So like January, what are they charging in January on a random weekend? So $213. And then we do that across a lot of properties. Here's a 4-bedroom, just like theirs. It's one extra bath. They have a 1-bathroom, so you got to pay attention to that. But great reviews on this property. And I just want to draw attention to the picture quality. Like these two properties are so similar, but somebody tried to save money by taking iPhone pictures here, and look how dark this kitchen, it looks decent, looks like an okay kitchen. And then you look at this one and they splurge the extra $100, $200 or whatever it is for professional pictures, and look at their kitchen. Like it's just so much brighter, looks so much bigger, so much more inviting. So if you're going to do a short-term rental, definitely pay for professional pictures. It's like the lowest hanging fruit, and it's amazing to me how many people don't do it. But anyways, so there's 69 great reviews, 4.97 star rating. And when we look at, so they're off season, November-ish, it's 408 for this 4-bedroom. It looked like all of September is already booked out. They already have bookings in every month going forward. So let's just see in May, they are at 416, so very similar to that last one. This is a 4-bedroom. The last one was a 3-bedroom. 523 in June. 547 in July, and we can do that with all these. So here's a 3-bedroom, not nearly as updated, but decent, has, again, really great reviews, all 5-star reviews. They do a good job with it. And so we can look back, and again, they're really booked out. The next 3 weeks are all booked. And they're a little bit more affordable. So $200 a night, and not nearly as updated as what we would have. So they're really booked out. And so it's a sign that they're probably not optimized in terms of their pricing. I think they could increase their pricing a bit, but you'll see a range. And so you're going to use the more conservative end of the range. Here's another 3-bedroom, 1-bath. This is a first floor unit or lower unit in a large house, similar to what we have or what this subject property is. And you can see $300 in May. They're already completely booked out in June, other than one 4-day stretch there. 308, so they just kind of keep the same price all throughout the summer at $300. So after you do that, then you can plug the numbers into your analyzer and really understand. So they got this property under contract for $286. They're estimating about $11,000 closing costs. After repair value, they're just throwing in about $300,000. It's going to be probably higher than that once we get it all optimized, but just a low estimate here. Annual property taxes are $3,500. Insurance are estimating about $1,500. Repair costs, so about $10,000 per unit just to, update it. That includes the exterior as well. And then furnishing costs about $25,000 between the two units. And then they're going to get a DSCR loan, which anyone can get, especially if you have cash flow like this. DSCR lenders love you, but it's based off the income of the property, not based off you yourself. They're getting a 75% LTV. So the bank is going to give them $214,000 of the $286 that they need to purchase this property. So the down payment's $71,000, and it's at a 6.63 rate right now is the quote that they got. Now, let's look at the income and expense side of the equation. So first off, let's look at the income. That last property that we looked at in Ottawa, because it was sort of removed from population, it was in an area that didn't drive as high a nightly rate and occupancy, the rates were a bit lower. But because this one has larger units and it's surrounded by population, the rates and occupancy are a bit higher. So we still are conservative, but on the 3-bedroom, in the peak summer months, we're estimating an average of $260 based off the comps that we saw, that's actually pretty low compared to some of the comps, and then $350 for the 4-bedroom. And we're counting the peak season as 120 days. That's 4 months of peak season. So we try to, again, be conservative with what we consider to be peak season, and we're going to estimate about a 70% occupancy. So remember, the daily rate and occupancy always work in tandem to get, your total income. So for that season, just for those 4 months, we're expecting about $51,000 of gross income. And then the other months of the year, the other 245 days, we're expecting about a 49% occupancy and a much lower nightly rate. So you want to account for the seasonality, and this is based always off of other comparable properties that we're looking at. And so that's about $45,000. So they're going to bring in $96,000 on this $285,000 property. Then you got to add in your cleaning costs. So if it's $90 per cleaning, you're going to pay that to your cleaner. So it's not like profit, but it is more revenue coming in, and then you count it as an expense. And so it's an extra $8,700. So we're going to gross $105,000 on this property, or $8,700 per month. And then when we look at the expense side of the equation, again, because this is such an affordable property, if this was $1 million, $2 million property, these expenses would be much higher, and you wouldn't be left with so much cash flow. But because it's such an affordable property, your mortgage payment's only $1,300. Your insurance is $125. Property tax is $298. Cleaning fee, this is based off of, paying our cleaners every cleaning that we have. We're estimating about $600 for utilities and Wi-Fi, lawn and snow removal. You got to account for that, consumables, maintenance. So every expense you want to account for, even if it's a set aside for a future expense like maintenance. You're not going to have $350 every month, but you want to set that aside because eventually the furnace is going to need to be replaced. So once you subtract out all of those, that's just under $4,000. So when we look at the deal calculations on this, check this out. This is an amazing real estate deal. Look at this. So you're bringing in $105,000. Less than 50% of that is expenses. So you're left with $58,000, over $58,000. That's almost $5,000 per month on a $286,000 property, or 45% cash on cash. So that means every dollar that they put into this deal, they're making a 45% return on every single year just from cash flow. So that doesn't include any appreciation. It doesn't include the big tax benefit that they're going to get from owning this property. It doesn't include the fact that even some of the expenses that we're counting here are actually principal pay down, because every time you make a mortgage payment that is paid by your guests, they're actually paying off your mortgage. It's not just all going as an expense to your interest, it's actually paying part of your principal off too. So all that's a benefit in addition to making a 45% return from the cash flow every single year going forward. And now, you see this and it's like, well, yeah, but they're underwater $33,000. This after repair value is just sort of a placeholder, because once everything's set up and operating well, what we've found is that the value vastly increases. Because if you go to anyone who's a sane person and show them these types of numbers, they're going to be willing to pay substantially more than $286. Like once this property is up and operating and beautiful, and they have it fully optimized with professional pictures and beautiful staging, and somebody can just step into their shoes and take over making $105,000 a year, that's worth a lot more than $285. So they're actually going to have a substantial amount of equity, and then over time, like I said, they're buying in the path of progress. So this area that they purchased in, like we always look at the street view of the property, it's a pretty decent street. It's a pretty decent area, but again, it's like right on the border. So like you go further east, it gets really nice. You go further west, it's not nearly as nice, but they're developing, and so if you're in this path of progress where they're consistently expanding and the nicer areas getting even better, then that catches up to you in terms of value of the property. So I'm just so excited for them to walk away from a deal that was marginal in order to be able to purchase this property that is phenomenal. So why all these short-term rental gurus out there are so focused on the high-end mainstream vacation rental areas where you have to pay $1 million to even get into a single family home that's barely going to cash flow, when you've got properties just like this that you can buy for less than $300,000 that they're going to make almost $5,000 per month of profit every single month going forward. And in a worst case scenario, they could convert it to a long-term rental and it still cash flows really, really well. So they're in a great protected downside position, but they have massive upside. So why everyone is focused, when you search on YouTube for short-term rentals, everyone's so focused on these high-end properties and no one's talking about this. I don't get it. But if you want to buy a property similar to this and you want to be walked through the entire process of identifying the perfect market, the right type of deal, the right type of financing, how to set it all up, how to operate it going forward to maximize your net cash flow, you can set up a call with me or one of my team members at the link below. It's in the description, and just share your goals with us. And we'd love to talk through your goals, share the details of the program, how it all works, and see if it's a good fit for you. Because for some people, it's not a good fit if you're not looking to do this strategy. But for someone who is looking to do this strategy and really maximize net cash flow and get to financial freedom as quickly as possible, it tends to be a really, really good fit. So thanks again for spending time with me to check out this video. God bless you, and I'll see you in the next video.
Okay.